Hi again, everyone. This is Ed the Finance Guy. Thanks for tuning in. Appreciate all the loyal viewers and all the emails. Please continue emailing ed1959@usa.com. If you have any questions, just call me, 516-205-0722. Today I wanted to discuss a topic. Years ago, I used to be involved with a friend of mine, Joel, and we were very into this biweekly mortgage program. And if people have asked about it, you don't hear about it as much because it's something you probably could do on your own. You don't really need to pay anyone to do it. So the way it works is you have a mortgage, and probably the biggest principal, the biggest investment you have in life is your house. So you want to make sure that that gets paid off, and you want to make sure you always can make the payments. And the idea is with a biweekly mortgage payment is you're paying extra principal every month. So if you pay a mortgage bi-weekly, there's 52 weeks in the year divided by 2. So there's 26 two-week periods. So if you're making 26 two-week periods, it's as if you're making 13 monthly payments. So 13 monthly payments would give you one extra payment that would go directly into your principal. Mortgages, amortization schedules, are interest front-loaded. So the very first 7 years, I believe, you're only paying 2%, 3% principal on your mortgage. So the way to make sure you pay more principal monthly is to make an extra payment. So I have a lot of clients that take their tax refund at the end of the year. They send it right into their mortgage company. You have to write on the check principal only to make sure, because for years, banks were doing it incorrectly and they were taking in the money and they were actually crediting it towards interest. And big banks got fined a large amount of money for doing it incorrectly. So at the end of the year, you're going to get a statement, and that statement's going to be an escrow statement. It's going to show all the payments that you made during the year, what percentage of that payment went for principal, what went for interest. So if you make an extra $600 payment in March, you should be able to see that on the schedule, to see that that money came right off your principal. So now let's say you owe $100,000 on your mortgage. You're making a $2,000 a month payment. $1,950 goes for interest, $50 goes for principal. If you made an extra $1,000 principal payment only, you're going to owe $1,000 less. So when you make that $2,000 payment, maybe $1,900 will go for interest because now you owe less money. So less of that money is going to go towards interest because you owe less money. So the theory is if you have a 3% mortgage, and you're getting 8% in the bank, which I know is impossible, it doesn't make sense to take money out of that account and prepay your mortgage. But if you're getting half of 1% in the bank, or you're getting a third of 1% in your savings account, but you're paying 3 or 4% on your mortgage, it makes sense to prepay your mortgage to get rid of that 3% debt. When you're only making 0.5% of your money, why would you want to pay 3% in your mortgage? So the more payments that you make, the more principal payments that you make, you'll knock down the number of years you have the mortgage. And if you ever sell the house, you're going to get the money back. It's like money in the bank. When you sell the house, you're going to get more principal back because you paid off more of your mortgage. If you do that bi-weekly program, you will end up saving 7 years on your mortgage. So if you have a 30-year mortgage, you can knock it down to 23 years by prepaying your mortgage. Now, you could do one mortgage payment extra every year, or like I do, pay an extra $200 a month into your payment. So this way, every month, your principal is dropping, the interest that you're paying on the mortgage is dropping, the principal is going up. So you want to try to see if you can prepay that mortgage, and now you're going to turn around and say, well, Ed, I got a really great deduction now. I'm going to lose that deduction. It's not true. It's not that you're going to lose the deduction. You're going to be paying less interest. So if you're paying $15,000 on your mortgage, maybe you're saving $3,000 in taxes. Wouldn't it be better not to pay $15,000 on your mortgage, not get the write-off, save $15,000, than to pay $15,000 and get a $3,000 write-off? So you have to kind of like decide which is better to do. If you have the ability to prepay your mortgage every month, you should do that. If you can do it once every 6 months, once every 3 months, once a year, you should do that too. Just make sure you mark the check principal only, and make sure at the end of the year you check your statement, make sure the bank did it correctly, because they have to audit all these statements and very often they don't do that. You want to make sure it's done correctly. So I hope this helped you, and you have a mortgage, you want to prepay it. My own daughter has been doing it. It's working out great for her. She's hoping to sell her house in 5 years. If she does, she's going to have a nice principal payment from her mortgage, extra money that she paid. She's going to get it back. She's going to be thrilled. She saved interest all along. So you should keep doing that too. Again, I do appreciate everyone tuning in. If you have any questions, ed1959@usa.com. I'm very available. 516-205-0722. You can text me. If you have a quick question, I'll respond as soon as I can. Subscribe, share, like the video. Again, this is Ed the Finance Guy. I'm glad you were tuning in. Keep listening and have a great and safe day.